The momentum from the rate cuts did continue last week. It was a good performance from the U.S. markets, but an even better performance from the overseas markets, driven primarily from a Chinese stimulus package that the market had been waiting for. So overseas markets just absolutely knocked it out of the park. But again, U.S. markets did very well, kind of riding that momentum from the rate cuts a couple weeks ago. So all good stuff as we close out September. Today, of course, being the last day of September. And this is your Market in Minutes report. I'm Mike Minter. We are looking back on last week, September the 23rd to the 27th. And as I said, this will be the last day of the third quarter. So we will be entering into the fourth quarter starting tomorrow. So let's take a look at where we are here. Last week, of course, as I said, markets were all up except for small caps, which did take a little bit of a ding. But in general, good across the board. This is what I was referring to when I talked about overseas markets. So the MSCI EAFE Europe, Australia, and the Far East Index up almost 4%. So really, really great returns there. We'll talk a little bit more about that stimulus package here in a minute. But so year-to-date performance, as you would suspect, is just really good across the board. If we were to close out the year right now, it would be considered just a really great performance. So granted, we got to get through the fourth quarter, and there's a lot to digest there with the election coming up and just a myriad of geopolitical issues. But that being said, there's always something to be worried about. So rates have not moved a tremendous amount. I mean, obviously they've continued to come down, but since the last report, not any just dramatic moves. As you can see, though, the yield curve, and I can start bringing in a graph, but it is de-inverted now. So in other words, it did this process of de-inversion over the last few weeks, even leading up to the Fed's announcement that they were going to cut rates by 50 basis points. But obviously, you can see that 30 years yielding more than the 10, and the 10 over the 2, and so on and so forth. So that's a healthy thing. That's considered healthy. You want to see an upward sloping yield curve, which is exactly where we are now. So that's good news. 30-year mortgage is 6.83% on a national level. Really hasn't changed that much since the last report. Better for homeowners, still nowhere near where I think we need to see them for this housing market to really just boom again. This is really not going to cut it. So hopefully 30-year mortgages do continue to come down a bit for those home buyers out there. So Congress did pass a spending bill last week. That was big news. So stock started the week tepidly, but in the green. And then as investors mostly shrugged off Tuesday's weak consumer confidence report. But then at midweek, markets put on the brakes as investors appeared to take profits after a 4-day winning streak. Thursday, markets did rally on news that the final Q2 GDP estimate showed the economy increased at an annual rate of 3%. And then Friday, the personal consumption and expenditures index, which is what the Fed focuses a lot on in terms of inflation, it showed that inflation had cooled slightly more than expected in August. Good news, which some believe may influence the Fed's decisions on short-term rates at its November meeting. The Fed's widely expected, I think, to cut maybe a couple more times this year, an additional 50 basis points before year end. That's always up in the air, but that's kind of the thought process now. And then finally, a continuing resolution was passed by Congress last week and signed by President Biden Friday morning. And this was assuaged concerns of a government shutdown. So the resolution funds the government until December the 20th. Okay, let's take a look at the next big piece of news. This is what I was referring to overseas and the big pop we saw in that index driven primarily from China's stimulus package. This week, the head-turning performance came from outside the U.S. as measured by the MSCI EAFE, Europe, Australia, and Far East, as we discussed. International stocks rose more than 3%, almost 4%. Following news of China's stimulus package, which could be as much as 2 trillion yuan or $284 billion US dollars. So China's program also cuts banks' reserves requirements and lowered a key short-term interest rate. Obviously, this should really be a boon for their economy and markets. While the EAFE index doesn't track stocks from mainland China, the stimulus package had far-reaching implications for other countries, which is obvious given their performance. So that kind of rounds out the main news. But what's on deck for this week? So we have key economic data and companies reporting earnings. A lot of economic data going on here. I'm not going to name all this, but Monday we do have Fed Chair Powell speaking. So that's today. That'll be interesting. We definitely want to tune into that. ISM manufacturing index on Tuesday, construction spending, and then we have Fed officials speaking. Wednesday, ADP employment report, motor vehicle sales, more Fed officials. Thursday, jobless claims, factory orders, and ISM services, 10-year Treasury note announcement. That will be good. More Fed officials. And then Friday, we have the employment situation report, always a good one. And Fed official John Williams speaking. Not a whole lot going on in earnings, obviously closing out the quarter today, so kind of on the tail end of that. But Tuesday, Nike and Paychex, and then Thursday, Constellation Brands will be reporting their earnings. So that's it for the week, folks. Really appreciate you tuning in, and of course, we'll report back to you next Monday with all the findings from this week. And hit that subscribe button down below if you haven't already. Love to have you get all our videos as they come out. And I'll leave you with a little final disclosure here. Other than that, folks, have a great week, and we will talk to you soon. Thanks.